Welcome back to the quarterly call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Okay, so today we're cracking open the latest strategic report from, well, one of the biggest names in travel tech. We're really going to focus on their Q3 2025 performance.
Yeah, and it's a really interesting one because it wasn't just about, steady growth in the main business. They simultaneously kicked off some huge, multi-year strategic pushes.
Exactly, four major initiatives, right, while still growing the core. It's quite the balancing act.
It really is. And you can see, looking at this quarter, it feels like a real acceleration point. Management's clearly putting capital to work aggressively. I mean, the cash flow is just immense right now.
Right, and that's funding everything, the expansion, the new stuff like services and hotels.
All of it. Geographic expansion, jumping into completely new areas like services, experiences, even a proper hotel business. And underneath it all is this really ambitious bet on their own AI capabilities.
So our goal here is to kind of unpack all that complexity. We want to get beyond just the headline numbers you might see in a press release.
Right. Understand the mechanics behind it.
Yeah. We'll focus on those four key pillars that are supposed to be driving growth, look at the financials that are making it all possible, and sort of distill what it means strategically, for their position in the market.
Sounds good. If you need that sort of strategic shortcut to understand where this platform might be headed in the next, say, 5 years, this should give you a good handle on it. Hashtag UII, financial performance and operational acceleration in Q3 2025.
Okay, let's kick things off where the market always looks first. The financials. How strong was the bottom line in Q3?
Well, strong is probably an understatement. Q3 2025 wasn't just, a good quarter. It was really a showcase of operational leverage and, frankly, execution at a massive scale.
Okay, so let's talk numbers. The headline revenue figure.
Came in at $4.1 billion.
$4.1 billion. And how does that stack up year over year?
That's a solid 10% increase compared to last year. And importantly, it hit the high end of their own guidance range.
So meeting expectations, even slightly beating them on the top line. But you mentioned operational leverage. That usually points towards profitability, right?
Absolutely. And that's where the real story is this quarter. Adjusted EBITDA, that was the standout.
How high did it go?
It hit $2.1 billion.
$0.1 billion just in Q3.
Just in Q3. That's officially the highest adjusted EBITDA they've ever recorded in a single quarter.
Ever.
Staggering.
Especially for a company that's still investing heavily in R&D, launching all these new things we just talked about. What does that tell us about their cost structure, getting that kind of profit?
It translates directly into a 50% adjusted EBITDA margin. 50.
50% margin in travel. That seems exceptionally high.
It is extraordinary. I mean, think about the costs in travel, marketing spend, engineering talent, trust, and safety infrastructure. Hitting 50% shows, well, two key things. First, their core platform model, once it's built out, is inherently capital light. Second, the revenue they're generating from the existing supply, it's flowing to the bottom line with incredible efficiency.
So they've figured out how to grow aggressively without tanking their profitability.
Exactly. That's the key takeaway. They can push for growth and maintain, even improve, margins.
And that efficiency, that cash generation, that's the fuel for everything else we're going to talk about.
Precisely.
Okay, so that's the profit picture. Let's look at the volume driving the revenue. What were the key growth metrics looking like?
Well, the main one people track is gross booking value, GBV. That grew 14% year over year.
14%.
Strong. Yeah. Reached $22.9 billion. Good momentum. But the real indicator of operational acceleration, I think, is in the actual volume metric, nights and seats booked.
Right. That's the measure of how much people are actually using the platform. What did that look like?
That core metric was up 9% year over year.
Okay, 9%.
But the crucial part is the sequential trend. That 9% represents a 2-point acceleration compared to the growth rate they saw in Q2.
Ah, so growth actually picked up speed from Q2 to Q3. That's interesting. Was that expected?
Apparently not entirely.
Yeah.
They noted it exceeded their own internal expectations. Seems it was largely driven by strength in the U.S. market specifically, and also average daily rates, the ADRs, which held up well.
Okay, let's pause on that U.S. strength. You often hear about the U.S. being a more mature market for them. So where's this extra acceleration coming from? Is it just the overall travel market bouncing back, or are they taking share?
It looks more structural, or at least strategically driven. I mean, geographically, the growth was pretty widespread.
Right.
Management said Knight's growth either held steady or actually accelerated sequentially in all their major regions.
All of them. Wow.
Yeah, Latin America was the absolute leader, growing in the low 20% range.
Oh.
Asia Pacific was strong too, mid-teens growth. And even the big established markets like North America and EMEA, they showed mid-single-digit growth, which is pretty impressive given their size.
But that specific U.S. bump, that 2-point sequential jump, did they point to anything specific causing that? A new feature, maybe?
They did. They specifically credited the meaningful acceleration they saw in the U.S. between Q2 and Q3 to the launch of a major new payment offering, something called Reserve Now, Pay Later.
Ah, okay. We'll definitely need to dig into that feature later. Seems like it had immediate impact.
So very immediate impact, yeah. Changed user behavior pretty quickly in their biggest market.
Got it. Okay, let's quickly touch on the official net income. You said adjusted EBITDA was a record, but the net income figure, $1.4 billion or 2.21 cents per share, only grew 4% year over year. Seems like a lag compared to the EBITDA growth. Was there something specific dragging that down?
Yes, and it's a really important detail, especially if you're just looking at the net income line. There was a significant one-time item, a valuation allowance of $213 million.
$213 million? What was that for?
It was related to corporate alternative minimum tax credits, and it was triggered by this new piece of legislation, the One Big Beautiful Bill Act, which was enacted back on July 4th.
Okay, so a regulatory change forcing an accounting adjustment sounds like maybe short-term pain for long-term gain. Can you explain that trade-off?
That's a good way to put it. Essentially, this allowance is a non-cash adjustment they had to make because the new law changed how existing tax credits are valued against future tax liabilities.
Right.
It's kind of technical accounting stuff. But the key strategic point is the future benefit. They're taking this hit in Q3, basically, to set themselves up for a significantly lower effective tax rate starting in 2026.
Ah, so they bite the bullet now on the accounting side because the structural changes in that bill, especially around foreign earnings taxes, will actually help them pay less tax overall from 2026 onwards.
Exactly. It's a strategic move. Accept the current quarter's impact to lock in a better long-term tax structure. Improves their financial leverage down the road.
Makes sense. It fits with that theme of long-term efficiency. Which brings us back to cash flow. How much cash did they actually generate?
Immense amounts. $1.3 billion in free cash flow just in Q3.
$1.3 billion in 3 months.
Yep. And if you look at the trailing 12 months, that totals $4.5 billion in free cash flow.
$4.5 billion. What kind of margin is that?
That works out to a 38% free cash flow margin over the last year. Just phenomenal cash generation.
And that fire hose of cash completely funds their capital allocation, presumably including buybacks.
It does. They bought back $857 million worth of their stock in Q3 alone.
Almost $1 billion.
And over the last 12 months, it's over $3.5 billion in repurchases. That's roughly 3/4 of that massive free cash flow going right back into buybacks.
That's a significant return of capital.
It is. And it's not just token amounts. Since they started this program back in 2022, they've actually reduced their total share count by 8%.
8% reduction. That signals pretty strong confidence from management that the stock is undervalued, right?
You'd have to assume so. And they're not done yet. They still have $6.6 billion remaining on their current buyback authorization.
Okay, so let's quickly recap this section. We've got record profitability, record margins, accelerating growth, especially in the key U.S. market, driven by new features. They're making smart, if slightly painful, tax adjustments for the long term. And it's all underpinned by just massive cash generation funding, significant buybacks.
That's the picture. A very strong financial foundation.
And that foundation is crucial, isn't it? Because it's what makes these big strategic bets we're about to discuss even feasible.
Exactly. Without that financial engine, none of the rest of this would be possible at this scale.
All right, perfect transition. That financial strength lets us look at where the money's going. Pillar number 1, enhancing the core product. Sounds simple, but they seem to be doing it at incredible speed.
Yeah, the connection is direct. They have the cash. They can hire the engineers. They can move fast. And the result? Since May alone, they've rolled out something like 65 major product improvements.
It's 65 in just a few months.
Yeah. The core idea is pretty basic, but powerful. Make the product better, remove friction, and people will use it more, maybe even pay more. It drives organic growth.
Okay, let's talk specifics. You mentioned that feature driving the U.S. acceleration, Reserve Now, Pay Later. How exactly does that work, and why was it such a game changer?
It really changes the booking calculation for the consumer, right?
Mm,
It launched just in the US to start.
yeah.
And crucially, they were smart about risk.
How so?
It's only offered to US customers booking domestically, and only for listings that already have flexible or moderate cancellation policies. So they're avoiding the riskiest scenarios, like international trips or non-refundable bookings.
Smart, limiting the downside. So when people were offered this option, how many actually took it?
The uptake was apparently huge. Around 70%, 70% of eligible users who see the offer actually choose it.
70%, that's massive. That clearly shows they hit a real user need or pain point.
Absolutely validates it. But there's a trade-off, isn't there?
Right. Does letting people reserve without paying immediately lead to more cancellations down the line? Are they just pulling demand forward that might not stick?
That's the critical question. And management acknowledged, yes, it did result in an increase in cancellations. No surprise there.
Okay.
But, and this is key, they did rigorous testing. And that testing confirmed that the net impact is still a significant lift to overall bookings.
So the number of new bookings they get from people who wouldn't have booked otherwise outweighs the increase in cancellation.
Exactly. They're getting more people to commit initially, even if some drop off later. The net result is more finalized bookings. It increases overall conversion.
That makes sense. And that net lift must be pretty substantial if they're pointing to it as the main driver for the U.S. acceleration.
It seems so.
So what's the plan now? Roll it out further?
Yeah, given the success and the fact they managed the risk, they're planning a broader rollout next year. Probably taking it to some international markets, maybe tweaking the rules based on what they continue to learn in the U.S. It's a good example of their sort of test, learn, and deploy model.
Okay, moving from payments to the actual user experience, search and discovery. They apparently put a lot of effort into improving maps. Maps feel like a basic feature. Why was that such a priority?
Because it was a major source of friction and lost conversions. Historically, their in-app maps were, well, a bit basic.
Lacking detail.
Yeah. They didn't have the context people needed right at that decision point. Things like, how close is this really to the subway? Or, are there decent restaurants right nearby?
So people were leaving the app.
Exactly. They jump out to check Google Maps or Apple Maps, and once a user leaves the app mid-booking, poof, the chance of them coming back to complete the booking drops significantly.
Okay. So fixing maps wasn't just about looking better. It was about keeping users in the app during that crucial decision phase.
Precisely. Retain them in the ecosystem. So the upgrade was substantial.
What did they add?
They basically turned the map into a real decision-making tool. You can now see nearby landmarks, overlay public transit routes, see restaurants pop up, multiple views too, satellite, street view, transit maps.
So it becomes less of a static location pin and more of an active tool to help you choose.
Right. Those convert the booking, keeps the user engaged, stops them from leaving. It's using data they already have to add real value.
Smart. Okay, the last piece in this pillar was policy changes. Tweaking cancellation policies. How did that help?
It was about making things simpler and fairer for both sides, hosts and guests, which builds trust.
Okay.
For hosts, they made it easier to get highlighted if they offer free cancellation up to 14 days before check-in. And for guests, they added a really useful feature. You can cancel for free within 24 hours of booking, as long as you booked more than 7 days out.
Oh, that 24-hour grace period sounds great for guests. Reduces that instant buyer's remorse, maybe.
Exactly. Takes the pressure off a bit. And the results are apparently quite clear.
Yeah.
Management's reporting fewer customer service contacts related to cancellation confusion or disputes. That saves operational costs, obviously. But more importantly, reducing that friction for everyone seems to be leading to an increase in overall annualized bookings.
Interesting. So these 65 improvements, like the payment option, the map upgrades, the policy tweaks, they're not just small fixes. They add up to real operational gains and booking growth.
That's the idea. Small optimizations executed quickly and at scale, driving those big efficiency numbers like the 50% EBITDA margin.
Okay, shifting gears to pillar 2. This moves us from improving the core product to really expanding the map, quite literally, growing internationally. They're framing this very clearly as a multi-year effort.
Right. A long game. We heard earlier that growth accelerated across all regions, but are these specific expansion markets growing significantly faster than the established ones? Oh yeah. The difference is pretty stark. The data they shared shows that over the last 12 months, nights booked in these designated expansion markets grew on average, at double the rate of their core markets like North America or Western Europe.
Double the rate. Okay, that definitely confirms the potential is there.
Huge latent demand in these regions that are really just starting to unlock now.
And is this growth coming from attracting new local users and hosts within those countries? Or just existing users traveling more? It needs to be local adoption for it to be sustainable, right?
That's the key,
Yeah.
absolutely. And the signs are good. They pointed to strong indicators of actual platform adoption. Like first-time bookers were up over 20% year over year in Japan.
Okay.
And get this nearly 50% year-over-year growth in first-time bookers in India.
50% in India. Wow, that suggests they're really starting to crack the code there culturally.
It seems like it.
Yeah.
These aren't just big percentages on small numbers anymore. It reflects that their localized strategy is starting to gain real traction against local competitors or just the traditional hotel industry in those markets.
You mentioned a localized approach. What does that actually mean in practice? Is it just translating the app?
Oh, it's much deeper than that. This strategy kicked off maybe 2 or 3 years ago. It's built on recognizing that travel habits, how people pay, the regulations, it's all vastly different from market to market.
Right.
So it means developing a specific playbook for each key country. Maybe that means optimizing for mobile payments heavily in one place or focusing on features for long-term stays in another, and then coupling that with very targeted local marketing that resonates with how people in that country actually travel domestically.
Okay, let's make that concrete. They gave a couple of case studies, right? Brazil was mentioned as an early success story in Latin America. What does that success look like after several years?
Brazil is kind of their proof of concept for why patience pays off. They've been investing significantly in Latin America and specifically Brazil for a good number of years now.
And the result?
That sustained effort hasn't just gotten them a foothold. They've been consistently gaining meaningful market share year after year, even against strong local players. They basically see Brazil as a playbook they've successfully executed, showing that long-term, localized investment delivers real incremental gains.
Okay, so Brazil is the established model. Now, contrast that with Japan, which they said is a much newer focus market. Where are they in that process?
Japan is really at the early stages of that same playbook. The really dedicated push there, especially the local marketing, aimed at getting Japanese residents to use the platform for travel within Japan, not just international tourists coming in. That really only started about a year ago.
So early days.
Very early days. They're seeing initial positive signs, growth is happening. But Japan really highlights the main point. Every market is different and needs its own timeline. A place like Japan, with very unique cultural expectations around service, deeply ingrained local travel habits. It just requires that consistent investment over the long haul before you see Brazil-level results.
So the big takeaway from Pillar 2 is basically patience and localization. Doubling the growth rate compared to core markets is possible, but it requires a dedicated multi-year strategy tailored to each specific country.
Exactly. It's definitely not a sprint they're running here. It's a marathon to structurally change their global footprint. And again, it relies heavily on those strong financial results we talked about earlier to fund the local teams, the marketing, everything needed in these high-potential regions.
And the upside is potentially huge, given how much of Asia and Latin America is still relatively untapped for them.
Massive upside, yeah.
Okay, Pillar 3. This one's about diversification, moving beyond just being a place to stay. Adding services and experiences, S&E. That launched back in May, right? How's the reception been?
The reception, based on user feedback, has been phenomenal, like almost surprisingly good. The average rating for S&E is 4.93 out of 5 stars.
4.93. That's incredibly high.
It is. It's actually higher than the average rating for their core homes business, which itself is already very high at 4.8.
Wow. So the quality is definitely there right out of the gate.
It suggests this isn't just some add-on feature they bolted on. It's a genuinely compelling offering that people are loving.
And strategically, how does it help the overall platform? Is it actually bringing new people into the fold?
Yes, significantly. It acts as a really effective acquisition channel and engagement hook. The Q3 data showed that almost half, nearly 50% of the people booking experiences didn't book a stay on the platform during that period.
Interesting. So it's a different entry point.
Exactly. And even more telling, about 10% of the people booking services were completely new to the platform overall, first-time users.
Okay, so S&E provides a lower friction way for someone to try the brand, maybe book a cool local tour first, then consider booking a stay later.
That seems to be the dynamic. It lowers the barrier to entry.
Makes the investment very strategic then.
Yeah.
Is the supply side keeping up? We know recruiting hosts for homes can be complex. Is it easier to get people to offer services or experiences?
Well, the interest from potential providers seems to be exploding. They got over 110,000 applications from potential S&E hosts in Q3.
110,000.
Yeah, that's nearly double the number of applications they got just the quarter before.
Okay, so providers clearly see the value in getting access to this platform's audience.
Massive audience,
Yeah.
highly motivated travelers. It's a big draw for experienced providers.
And they're also doing something interesting with the social aspect of S&E, right? Trying to make it less transactional.
Yeah, this ties right back into their whole mission of connecting people in the real world. They're deliberately making S&E more social.
How?
Features like showing you who else has signed up for the same experience, maybe where they're from. And after the experience, you can actually request to connect and message other people you met.
Interesting. Fostering real connections.
Yeah, and they added this connections section to user profiles too. It really leans into building a community, not just facilitating bookings. It almost edges into social media territory, but focused purely on real-world interactions.
But even with all this positive momentum, management is saying this is still a 3 to 5 year journey before S&E becomes truly material financially. Why such a long timeline if it's so popular?
It comes down to their focus on quality and building density. They're being very deliberate, not just rolling it out everywhere thinly. Instead, they're taking this very focused city-by-city approach. Build deep, high-quality supply in one market before moving aggressively to the next. It actually mirrors how they built the core homes business way back in the early days, focusing intensely on places like New York City first.
So which cities are the current focus for S&E?
Right now, the main development hubs are Paris and Los Angeles. That's where they're really investing, refining the playbook, learning what works.
And what are they learning? They mentioned this originals concept, which seems to be resonating particularly well with locals.
Yeah, the originals are these unique, highly curated experiences. And the key metric they shared was fascinating. In Paris, 70% of the bookings for these originals came from locals, not tourists.
70% local booking. That's huge for an experience offering.
It's incredibly hard to achieve usually. If locals are booking it, it validates the quality, the price point, the uniqueness. It means it's genuinely good, not just a tourist trap.
And presumably there's a marketing benefit too, bundling these unique experiences with homestays.
Big time. It makes the whole package way more differentiated. If you see an ad for a cool, unique home, plus a really interesting local experience you can book right there, that's much more compelling than just a standard hotel room ad.
So S&E actually helps sell the core homes business too?
Exactly. It's a cross-promotional flywheel. Makes the entire platform offering feel more unique.
Okay, that covers S&E. Now, the other big diversification play in this pillar, hotels. This sounds like a pretty major shift, launching a proper hotel business beyond just the old Hotel Tonight app they sunsetted.
It is a major strategic move towards a more hybrid inventory model. But again, they're starting cautiously. It's currently a pilot program
Where?
in just 3 cities for now: LA, New York City, and Madrid.
LA, New York, Madrid. Any reason for those specific cities?
Yeah, it's deliberate. These are all major urban centers with high travel demand, but they also face significant challenges for the homes business, either regulatory hurdles or simply not enough home inventory to meet demand. So hotels are essentially filling a supply gap in these key markets.
So are they trying to become another Booking.com or Expedia? Competing head-to-head for all hotel bookings?
No, definitely not. Their approach is much more targeted. They're focusing exclusively on partnerships with boutique and independent hotels.
Ah, interesting. Not the big chains.
Right. They're looking for unique, independent properties that maybe want an alternative distribution channel, one that brings in high-quality travelers, rather than just being another listing on a massive commoditized marketplace.
And how are they integrating this into the app? Does it feel separate or part of the main experience?
They've apparently custom-built the hotel features right into the main platform, recognizing that booking a hotel is different from booking a home.
Yeah, different needs.
So they've added things like new search filters specifically for hotels, different ways to display hotel listings, and importantly, the ability for guests to choose their specific room type, which is standard for hotels but not for homes.
So what's the core thinking behind adding hotels now? Is it purely defensive, filling those supply gaps, or is it a more offensive move?
Management positions it primarily as a supply and use case solution. Their argument is that homes and hotels often serve different needs or different types of travelers.
Like what?
Hotels might be better for, say, a one-night stay, a last-minute booking, a solo business traveler. Homes tend to be better for groups, families, longer stays, people seeking more local immersion.
So they see it as complementary, not cannibalistic. Adding hotels captures trips they were previously missing entirely?
That's the idea. They don't expect someone looking for a week-long family vacation rental to suddenly book a hotel room instead. It's about serving different trip types.
Okay. And practically speaking, is it easier to bring hotels onto the platform than individual home hosts?
Oh, significantly easier and more scalable, yes. Onboarding one hotel contract brings potentially hundreds of rooms online versus recruiting individual hosts one by one.
Right.
Especially since the demand is already there on the platform in these big cities, they don't need to generate new demand for hotels in NYC. They just need to plug the hotel inventory into their existing traffic fire hose.
So the long-term vision here is pretty ambitious then. It's about becoming a more comprehensive travel platform.
Exactly. Moving towards being a genuine one-stop shop, offering a curated portfolio of choices, unique homes, unique experiences, and unique hotels to cover pretty much any travel need. That hybrid model becomes their key differentiator against the giant, more generic online travel agencies.
All right, pillar 4. This feels like the big one, the foundational bet for the future, AI. The CEO basically said betting on the platform now is betting on AI. That's a strong statement. Why do they think they're particularly well suited to win with AI compared to others in travel?
It really boils down to the nature of their inventory, the core challenge and opportunity for them.
Meaning.
Think about traditional travel flights, rental cars, big chain hotel rooms. They're all pretty standardized, right? They're like SKUs, stock keeping units.
Right.
Relatively easy for computers to categorize, compare, manage.
Okay, yeah, a flight seat is a flight seat, mostly.
Exactly. But this platform deals with millions upon millions of unique, one-of-a-kind listings. Every home is different photos, amenities, host interactions, local rules, tree houses, condos, farm stays.
Total chaos inventory-wise.
Precisely. Managing that sheer variety and uniqueness, that chaos at scale, is exponentially harder than managing standardized data. And that's where AI, especially large language models, excels structuring unstructured data, understanding nuance, personalizing recommendations from chaos. It gives them a kind of natural advantage or moat in applying AI.
Makes sense. So they're running what? Over a dozen AI projects already. Where did they decide to start? What was the first big application?
They tackled what they call the hardest problem first, customer support.
Customer support. Why start there? Seems high risk.
Exactly, because the stakes are so high. AI in customer support has to be perfect. It needs total accuracy. It has to handle really complex, sensitive situations. Think someone locked out of a rental late at night, or dealing with language barriers, or needing to change booking details securely. There's zero room for error for AI hallucinations.
So a real stress test for the AI models.
The ultimate stress test. If they could nail AI for complex, high-stakes support, they could trust it elsewhere.
So how does this AI assistant actually work in practice for a user? Is it just a smarter chatbot?
It's apparently much more than that. It gives tailored responses based on the user's specific booking context. But the key difference is it goes beyond just text.
How so?
It can actually embed custom interface elements, UI modules, directly into the chat window. So if you ask to, say, change your reservation dates, the AI might process the request and then immediately show you buttons or a calendar inside the chat to confirm the change right there.
Ah, so you can take action directly from the chat, not just get information.
Exactly. It solves problems in seconds, they claim, instead of the hours it might take waiting for a human agent escalation for common tasks.
That sounds like a massive win for efficiency and user satisfaction. What kind of impact did they see from the initial US rollout?
Pretty significant. They said it reduced the need for users to contact a human agent by 15%.
15% reduction. That's huge. Saves costs, makes users happier.
Absolutely. Reduces those friction points that really damage trust. And the plan now is to expand this AI support to over 50 languages next year, so they can scale global support without having to scale their human agent headcount linearly.
Very clever. Okay, so customer support was the first hurdle cleared. What's the next big AI focus? Search and discovery seems like the obvious place.
You got it. AI-powered search is the next major phase, and that's scheduled to start rolling out next year. This is where the app starts to feel really conversational.
How is it going to work?
They're testing this concept they call a what box.
A what box?
Yeah, basically just a free text field like a chatbot interface right alongside the usual filters for location, dates, and number of guests.
So I can just type what I'm looking for, like Find me a quiet cabin near hiking trails with great wifey.
Exactly. Natural language input.
Yeah.
Ask for what you want conversationally.
Okay, that sounds cool. How does that evolve? Is it just a one-off search?
No, it's planned in phases. Phase 1 is using that natural language input to give you much more relevant search results. And, importantly, the AI will actually generate unique descriptions or summaries for the listings based on your query. The search results themselves will look different for different people.
Tailored results and copy. Okay, what's phase two?
Phase 2 is the really conversational part, multi-turn interaction. You'll be able to chat back and forth with the AI to refine your search. Like, okay, those look great, but they're a bit pricey. Can you find something similar under $200 a night and closer to the airport?
Ah, like talking to a real travel agent who remembers what you just said.
Precisely. That's the vision. True personalization, where theoretically, no two users see the exact same listing description. It's dynamically generated based on your specific needs, your past searches, your inferred intent.
That really does sound like a concierge experience.
That's the ultimate goal they articulated, to eventually merge search, customer service, even the host-guest messaging into one single seamless AI assistant that powers the entire app experience end-to-end, an intelligent agent for your trip.
But hang on, if everyone, all of the tech companies, have access to the same powerful AI models from places like Google or OpenAI, what makes this platform think they can execute better? What's their specific edge?
That's a fair question. Their argument is that winning in this AI race won't just be about who has the rawest model. It'll be about execution, specialization, and design.
Okay.
And they believe they have unique advantages. First, deep domain expertise in travel, especially their unique, messy, non-SKU inventory. Second, a really strong design capability. They emphasize wanting custom, rich interfaces for AI, not just basic text chatbots.
Right, like those UI modules and support.
Exactly. Third, proprietary data and features. Think about their massive messaging platform, tons of conversational data between hosts and guests.
And scale must be a factor, too.
Huge factor. They mentioned having over 200 million verified user identities. That's an enormous valuable data set. Plus, their global payments platform processes vast amounts of transaction data. All that proprietary data, combined with their focus on travel specialization, is what they believe gives them an edge.
So this AI strategy isn't just about tech for tech's sake. It sounds like it's tied to a deeper philosophy about travel itself.
Very much so. They explicitly called it their real-world bet.
The real-world bet.
Yeah. The core belief is this. As the internet gets increasingly flooded with AI-generated, maybe artificial content, the fundamental human desire for authentic, shareable, real-world experiences and connections is only going to get stronger.
Interesting counter-trend argument.
Right. So their strategy is to use the most advanced AI, not to trap people further in their screens like maybe some other tech platforms might, but to make the complex logistics of real-world travel so seamless, so easy, that it actually encourages people to get off their phones more often and go experience the world.
Use AI to facilitate reality, not replace it.
That's the thesis. Use AI to get people out the door faster and more frequently. Hashtag tags IVV sales, future velocity and market outlook. Okay, so pulling all this together, the aggressive AI push, launching S&E in hotels, it really points to a fundamental shift in how they innovate now. It feels much more entrepreneurial.
Yeah, launching 3 major new businesses just in 2025 is pretty ambitious. What does this imply for the future? Are we going to see even more new stuff coming down the pipeline?
It seems like it. They're moving away from this old model where every new idea had to be perfectly polished and ready for global scale right away.
Right.
The new approach seems much more about rapid, efficient testing and learning. They talked about embracing the idea of having maybe half a dozen or even a dozen new business concepts running simultaneously in small pilot markets.
Like the Luxe high-end segment they mentioned. Test it small first.
Exactly. Things like Lex. Start small, test it in a controlled way.
How did that speed things up or make it more efficient?
Well, by starting small, they can iterate really fast on the product, the pricing, the operations, without risking disruption to the main global brand if it doesn't work out. They figure out if it has potential, the product market fit, and the potential scaling ROI much, much quicker.
And if the pilot works.
Then they can hit the accelerator, scale it up aggressively, using the existing platform traffic and infrastructure. But if a pilot fails, they can shut it down quickly, learn the lessons, and move on with minimal wasted resources or organizational drag. It's designed for faster, more capital-efficient innovation.
Okay, that makes sense. But all this focus on new ventures, new businesses, doesn't that sometimes make investors worry that maybe the core homes business is slowing down, reaching maturity? How do they address that perception?
They push back on that idea pretty strongly. The concept of the core business being mature, they fundamentally reject it.
On what grounds?
Their key argument comes down to the sheer size of the overall accommodation market. They constantly repeat this stat. For every one person who stays in a home rental like theirs, 9 people still stay in a traditional hotel.
9 to 1, hotel versus home.
Yeah. They argue that huge disparity proves the potential market for homes is vastly larger than its current share. They believe the core homes market could easily double or more from where it is today. Plenty of room to grow.
Okay, so if it's not mature, what are the main obstacles they need to overcome to reaccelerate that core growth? What are the historical pain points they're focused on fixing?
They seem to be zeroing in on 3 main areas, 3 big reasons why people might still choose a hotel over a home.
Okay, number one.
Affordability. They acknowledge pricing is key. They talked about new pricing tools for hosts, helping to bring average prices down. And critically, that decision to show the total price up front, including all fees, right from the start of the search.
The all-in pricing. That was a big change.
Huge change. Makes them much more transparent
Huh.
and directly price competitive against hotels that often hide fees until the last step. Builds trust, removes sticker shock.
Okay, affordability. What's number two?
Quality and consistency. This is a big one. They openly admit that the potential for inconsistent quality is probably the single biggest reason many travelers still default to the predictability of a hotel chain.
Right, the worry about what you're actually going to get.
Exactly. So they're investing heavily in better quality control systems, more host education, better ways to surface reliable, high-quality listings, trying to make the experience more dependable.
Makes sense. And the third area?
Supply itself, specifically supply density in key markets. They know they need more listings, particularly in the top, say, 300 major urban markets globally where demand is highest.
So, building out a more focused recruitment effort in those big cities.
Yeah, a dedicated machine to increase supply where it matters most for driving conversion and keeping users coming back. And they also talked about targeting younger travelers, Gen Z, even Gen Alpha coming up, who they believe inherently prefer unique, authentic, shareable experiences over standardized ones. A demographic tailwind for their model.
Okay, while we're talking platform-wide stuff, two big initiatives always seem to come up. Loyalty and advertising. They still don't really have a major program for either. What's the thinking there? Why the delay?
Yeah, loyalty is a known gap. They acknowledge they're probably the biggest travel brand out there without a standard loyalty program.
So why not just launch one? Points, tiers, the usual stuff.
Because they stress they don't want to do the usual stuff. They're not interested in just rolling out a generic, off-the-shelf points program. The plan, apparently, is to build something unique, something that reflects their community focus. Rewarding the best community members, maybe the highest-rated hosts, the most frequent and trusted guests, rather than just rewarding pure transaction volume, something that reinforces the trust and quality aspects of the platform, not just spending. But it's clearly still in development.
Okay, interesting approach. What about advertising? They have massive traffic. Seems like a huge revenue opportunity they're leaving on the table.
It does, and they know it. They said they're actively reviewing their advertising strategy. But, and this connects back to the AI pillar, they're deliberately waiting until they fully implement that new AI-powered conversational search paradigm we discussed.
They want the search experience finalized first.
Exactly. They want any future advertising model to feel seamlessly integrated into that next-gen conversational search. Ads should feel helpful, relevant, personalized within that flow, not like clunky banners bolted onto the side that disrupt the new experience they're working so hard to build.
So experience first, monetization second. Protect the user experience they're building with AI.
That seems to be the priority. Nail the AI search, then figure out the right, non-intrusive way to layer in advertising.
Got it. One last point on platform strategy. Their approach to third-party integrations. They were noticeably absent from some big initial launches, like when ChatGPT opened its app store. Why hold back?
That was a very conscious decision, apparently rooted in protecting their brand and avoiding commoditization.
Meaning?
They felt that some of those early generic integrations would basically position them as just another interchangeable travel provider, a simple data layer for the AI assistant to pull from.
Right, losing their uniqueness.
Exactly. They want to ensure that any integration showcases their unique features, the specific inventory, the host messaging, the personalization capabilities. So they're prioritizing deeper, custom, well-developed partnerships where they have more control over how their brand and features are presented.
So not anti-integration, just anti-commoditization.
Precisely. They're open to broader integrations in the future, but only when they can ensure it's done in a way that maintains their distinct identity and value proposition, not just turning them into a generic backend for someone else's AI. Hashtag Sue4 2025 Outlook and Conclusion. Okay, so let's bring it home. Looking ahead to the final quarter of 2025 Q4, what's the outlook? Management seems pretty confident, right? Especially with that boost from Reserve Now, Pay Later in the U.S. carrying over.
Yeah, what are the actual numbers they guided for Q4 revenue?
They're projecting Q4 revenue to land somewhere between $2.66 billion and $2.72 billion.
Okay, and what kind of growth is that year over year?
That represents about 7% to 10% growth compared to Q4 of last year. And that includes a little bit of a tailwind expected from foreign exchange rates.
Got it. What about gross booking value, GBV?
Expected to grow in the low double digits year over year, so still pretty healthy growth there.
And the core volume metric, nights and seats booked. That had a tough comparison to last year, didn't it?
It did. Q4 last year was very strong. So for this Q4, they're projecting nights and seats growth in the mid-single-digit range year over year.
Mid-single digits. That sounds like a slowdown from Q3's 9%.
On a year-over-year basis, yes, purely because the comparison is harder. But critically, they pointed out that on a 2-year stacks basis, looking at growth over 2 years, they actually expect sequential acceleration from Q3 into Q4.
Ah, okay. So the underlying momentum smoothing out the yearly comps is still strong and even improving.
That's the message, yes. The underlying growth engine remains robust.
And that amazing 50% EBITDA margin in Q3, did that allow them to raise their guidance for the full year's profitability?
It did, slightly. They bumped up the full year 2025 adjusted EBITDA margin guidance. They now expect it to be approximately 35%, up from the previous floor of 34.5%.
Still very healthy margins for the full year, even with all the investment.
Absolutely. It confirms they're committed to growing profitably. And the focus for 2026, they said, is really maintaining those strong margins while continuing to invest aggressively in all these growth initiatives: AI, services, hotels, international.
So stepping back, this quarter really paints a picture of a company firing on, well, multiple cylinders. They've got the financial firepower from the core business,
Immense firepower.
and they're using it to simultaneously overhaul that core product experience, push hard into international markets, launch 3 entirely new business lines, and make this huge foundational bet on AI powering everything. It's incredibly ambitious.
It really is. It moves them way beyond just being,
Yeah.
a website for renting houses.
Yeah.
The whole strategy seems aimed at building something much bigger.
Right, like that idea of a global community.
Yeah, a community built on trust,
Right.
enabling people to, as they say, travel and live anywhere, and using technology, especially AI, not as the end goal, but as the tool to make those real-world connections and experiences easier to access.
And maybe that's the final thought for people listening. That interesting paradox. Leveraging the most sophisticated screen-based tech, AI, with the explicit goal of getting people off their screens.
Right. Using AI to simplify the inherent complexity and chaos of planning real-world travel so that the human connection, the shared experience, becomes easier, more frequent.
That focus on facilitating real-world experience powered by AI, that feels like the core bet that really separates them from maybe other players in the online travel space.
I think so. The ultimate measure of their AI success, in their view, seems to be how effectively it helps you put your phone down and actually enjoy the trip you took.
Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.